How to invest like Warren Buffett. Welcome to this video on how to invest like Warren Buffett, one of the most successful investors of all time. Warren Buffett is widely known for his long-term investment strategy, his value investing principles, and his ability to pick undervalued stocks. In this video, we will go through the key investment principles that Warren Buffett follows and how you can apply them to your own investments. Who is Warren Buffett? Warren Buffett is an American investor, business magnate, and philanthropist who is widely regarded as one of the most successful investors in history. He is the chairman and CEO of Berkshire Hathaway, a conglomerate holding company that owns a diverse range of businesses, including insurance, retail, energy, and transportation. Buffett's investment principles. Buffett's investment philosophy is rooted in value investing. He looks for companies that are undervalued by the market and have strong fundamentals, such as a competitive advantage, a solid management team, and a good track record of profitability. Here are some of the key principles that Warren Buffett follows. Number 1. Invest in what you know. Buffett advocates investing in businesses that you understand. It's important to have a good understanding of the company's business model, competitive advantages, and potential risks. This knowledge will help you make informed investment decisions and avoid making costly mistakes. Number 2. Focus on the long term. Buffett is a long-term investor, and he advises investors to adopt the same approach. He believes that holding on to good companies for a long period of time is the key to success. This allows you to benefit from the power of compounding, which can lead to significant gains over time. Number 3. Invest in businesses, not stocks. Buffett doesn't view stocks as pieces of paper, but rather as ownership stakes in a business. He looks for companies with a strong competitive advantage, a reliable management team, and a solid track record of profitability. By investing in quality businesses, Buffett believes that he can achieve consistent long-term returns. Number 4. Buy undervalued stocks. Buffett's value investing philosophy focuses on buying stocks that are undervalued by the market. This involves looking for companies with strong fundamentals that are trading at a lower price than their intrinsic value. By purchasing undervalued stocks, investors can benefit from the potential for long-term capital appreciation. Number 6. Diversify your investments. Buffett believes in the importance of diversification. By investing in a range of different companies across different industries, he reduces the risk of losing money in the event of a market downturn. Diversification also helps to ensure that your investments are not too heavily concentrated in any one particular company or sector. Number 6. Be patient. Buffett is known for his patience when it comes to investing. He believes that it's important to wait for the right opportunities to come along, rather than just jumping in and out of the market. By taking a long-term view, he is able to avoid the short-term volatility of the market and focus on the underlying fundamentals of the companies in which he invests. Number 7. Do your own research. Buffett is a firm believer in doing your own research when it comes to investing. He spends a significant amount of time reading financial statements, analyzing business models, and assessing management teams. By doing your own research, you can make informed investment decisions and avoid being swayed by short-term market sentiment. Number 8. Avoid herd mentality. Buffett warns against the dangers of herd mentality. He advises investors to avoid following the crowd and to think independently. By doing so, you can identify opportunities that others may have missed and avoid getting caught up in market hysteria. In summary, investing like Warren Buffett involves focusing on value investing principles, including investing in quality companies, looking for undervalued stocks, and holding on to them for the long term. It also involves being patient and disciplined, avoiding market timing, and minimizing fees. By taking a long-term view and following these principles, investors can achieve consistent returns and build a solid investment portfolio. If you have any questions or comments about this video, please leave them in the comments section below. And don't forget to subscribe to our channel for more informative videos on investing, personal finance, and other related topics. Thank you for watching, and we'll see you in the next video.